This is Connor from 0DTE Traders here to present the week ahead for September 2nd, 2025. Let's dive in. Wall Street will have a shortened trading week due to the Labor Day holiday. That is today. We're recording this on Monday. Nevertheless, participants will still have plenty of data to analyze, with the main focus on the labor market. Reports on job openings, private sector employment are scheduled for Wednesday and Thursday, concluding with Friday's August non farm payrolls report. Friday's payrolls will be closely watched following July's surprisingly weak results and the unusual large 2 month negative revisions to May and June's job growth. Any further signs of weakness in the U.S. labor market could make a September rate cut almost certain. As of now, according to the CME FedWatch tool, there is an 86.4% probability of a September rate cut. Also on the calendar, ISM manufacturing PMI due out on Tuesday and ISM services on Thursday. On the economic front, technology companies Salesforce and chipmaker Broadcom are scheduled to report. To start the month, the Gamma Index, which tracks dealer Gamma exposure, is positive, 340 million notional, trading above both transition levels 6450 flip and 6425 zero Gamma. The flip is our main transition level. As you can see, above all strikes are positive. That is supportive for the market price. Below, all strikes are negative. That is destabilizing for the market price. In other words, when you're above the flip, dealers are going to buy weakness, sell strength, known as the buy the dip regime. Conversely, below the flip, dealers are going to sell weakness, buy strength, essentially chasing deltas, which creates a more destabilizing, higher volatility environment. So if we do break below that flip, we would start to approach the markets a little bit more cautiously. Now, in regards to the upper bound, 6,500 has been a huge hurdle over the past few weeks. So you got 6,500, 6,505, which is the JP Morgan short call strike, which expires at the end of September. And then you have 6,510, which is a big SPY level. That is SPY 650. That is technically the call wall still for the SPY. However, for the SPX, the call wall, which is deemed the upper bound, defined by the strike with the highest net positive gamma, is now 6,600. Although I want to stress the variance here between 6,500 and 6,600 is minimal. And this shift is largely a function of puts being added at 6,500, not calls being added overhead. We're looking at the SPX open interest change chart day over day. Obviously, we just had the big month end option expiration, so we do see a removal of a lot of options across the board here, but some notable strikes. Once again, 6,500 puts added, 6,400 puts added, 6,300 puts removed, 6,500 calls removed, and 6,600 calls removed. The point is here, we continue to see a lack of demand for out of the money calls. This has been the theme for several weeks now. Reasoning is that rotation remains the short term consensus theme, with flows moving from growth into cyclicals and defensives. In this environment, upside is generally limited due to the outsized influence of growth and mega cap stocks on the S&P 500, which creates the potential for chop, negative drift until growth reasserts dominance. Now, this could last for weeks or months. However, as 0DTE traders, intraday relative sector performance will provide all the information we need. Now, here's a little cheat sheet. If sectors are mixed, so you got some advancing, some declining, it signals low volatility, lack of conviction, and neutrality. Now, there could be some directional skew here based on where growth and mega caps are moving. So, if growth sectors and megs are underperforming, upside may be limited. Conversely, when growth sectors and megs are outperforming, downside may be limited. Now, important to note here, rotation is generally not a linear process. So, you will have days where growth mega caps are bouncing back, and you could have some nice moves on the upside. So very important to give extra weight to those growth sectors, to mega cap stocks for directional skew. Of course, there are days where there may be strong directional conviction. If it's a strong bearish day, that's when most or all sectors are declining, signaling strong downside conviction. Conversely, strong bullish is when most or all sectors are advancing, signaling strong upside conviction. So I would write this down. I think when the market is undergoing rotation, this is probably the best information to look at to position accordingly regarding 0DTE. Taking a look at the SPX on the 1 hour chart, this is the month of August. We did have some selling pressure coming into the month, but we printed the low on the first, had a nice 2.5 week rally into the August option expiration. This is OPEX week, very low volatility supportive conditions, which is a normal pattern. We had the OPEX itself, the volatility unpinning, and a move down here for about a week or so as MAG's growth stocks tumbled. But that was short lived. We had the dovish pivot from Powell on Jackson Hole, risk assets reasserted dominance, and then we just sort of drifted higher here into the 6,500 handle. On Friday, we broke this upsloping structure, saw some selling pressure. But that selling pressure halted at our 64.50 flip level. This remains major support. A break opens the door down to 64.30, 64.25. This upsloping structure, 1, 2, 3. Additionally, this low, so this would be support. A break opens the door down to 6,400, followed by 63.60, 63.50, which is the low here before the recent up move. Additionally, we want to mark off the Jackson Hole low, which is about 63.84 to 63.73. This is a bit of a gap here. Now, why? When there's volatility events, a lot of participants pay attention to the high or the low, and it could remain relevant for weeks. So this may be a bit of a target on the downside. Now, as far as the upside goes, we have some resistance here at 63.75, or sorry, 64.75, 64.80. A break opens the door to a small gap on the upside, 64.91 to 65.01. And then we have that big 6,500 zone from 6,500 to 6,510. In the event of a break, it opens the door to 6,525, followed by 6,550. On Thursday, the VIX broke nearly 1 point below its lower bound, printing a new low for the year, 14.12. The following day, volatility was rebid, snapping back to that 15 handle. Now, this is the VIX open interest chart. 15 is considered the lower bound. You can see the drop off in open interest here. So anything below 15 is considered oversold from an options positioning perspective, and very rarely can price sustain oversold conditions. You tend to sort of get that snap back to that lower bound, which we most certainly saw on Friday. The VIX closed up 7 or 8%, closing at 15.35. Now, there is room, I would say, back down to maybe 14.5, 14.2, which could fuel a one-day upside squeeze if all sellers, crush vol. But that fuel will be quickly exhausted. In other words, a decline in volatility at this juncture will do little in regards to supporting the market, in regards to invoking buy flows. Conversely, if volatility continues to rise, it will exacerbate the downside. Volatility triggers 64.50, 64.25. In terms of strategy, short volatility continues to outperform as realized volatility continuously undershoots implied amid rotation. Looking at the volatility risk premium, implied volatility is above the 30-day realized vol and 10-day realized vol. Average true range, so this is 5-day average true range at 48 points, what did we have for implied move last week? 0.6, 0.7, 1.1% for Friday's PCE report. Once again, continues to undershoot implied volatility. In regards to single options, we've been recommending a more tactical scalping approach or being a little bit more conservative in your strike selection, i.e. positioning closer to the market price. However, if we break below that flip, long volatility may gain a little bit more of an edge where we can position further out of the money, get a little bit more leverage and convexity. So we'll see here what happens this week. Do we break those flips or does the market hold up well? We have, I would say, a lot on the calendar here to disrupt the balance of trade. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.